Welcome to China Biz Explained. Today we're unpacking a major financial lawsuit, one that really goes to the heart of market trust in U.S.-listed Chinese firms.
That's right. This involves Singapore's sovereign wealth fund, GIC, a very conservative player. They actually sued the electric vehicle maker, NIO, and its top execs in New York back in August 2025.
And the core issue isn't really about the electric cars themselves, is it?
No, not fundamentally. It's about governance and specifically financial transparency. I mean, when a cautious fund like GIC takes legal action over disclosure, it suggests a pretty serious governance, well, red line might have been crossed.
Okay, so let's set the scene. NIO's known for things like its battery-as-a-service bus.
Oh.
Why would they allegedly get into risky accounting territory?
Well, you really have to look at the timing. Back in early 2020, NIO was facing a major liquidity crunch. I mean, they were pretty open about it, warning cash might only last about a year.
Ah, so they were in a tight spot financially.
Exactly. And the creation of this structure, this Wuhan Weineng entity, which is central to the lawsuit, allegedly happened right around then. GIC suggests it was potentially, a way to quickly boost reported revenue when they desperately needed it.
Okay, let's break down that structure. NIO's model, selling the car without the battery, requiring a BAT subscription. How did they account for that before this Weineng thing?
So before August 2020, it was straightforward. They recognized the subscription money coming in slowly, over the lease term, maybe 5 to 6.5 years. That's standard accounting.
Right. So what changed with Wuhan Weineng?
Well, the allegation is this. NIO set up this joint venture, Weineng, and then essentially sold the batteries to Weineng up front.
Sold the batteries, okay.
Yes, selling those assets allowed NIO, allegedly, to book years' worth of future subscription revenue immediately, a huge boost to their income statement right when they needed cash.
And it pushed the costs, like depreciation, off their books.
Precisely. The depreciation on those batteries, which is significant, and the risk that customers might stop paying their BAS subscription, that all supposedly shifted to Weineng.
But for that to be legitimate under accounting rules, Weineng has to be truly independent, right? What's the argument there?
That's the absolute crux of GIC's case.
Yeah.
They argue Weineng wasn't independent at all. They claim NIO still effectively ran the battery swap stations, set the prices, handled servicing, and even guaranteed some of Weineng's potential losses if customers defaulted.
So NIO's still pulling the strings.
That's the claim. And GIC also points to NIO potentially holding a significant economic interest, maybe around 55%, which could make Weineng what's called a variable interest entity, or VIE.
A VIE.
Okay.
And under U.S. accounting rules, GAAP, what does that mean?
It means if NIO was the primary beneficiary, basically, if they got most of the benefits or absorbed most of the risks, then they should have consolidated Weineng, pulled its financials back onto NIO's own books.
Wait, so if they had consolidated Weineng, what would that look like financially for NIO?
Oh, completely different. They couldn't have booked all that revenue up front from the battery sale. They'd be back to recognizing the battery's income slowly over time.
And they'd have to absorb all those battery depreciation costs again.
Exactly. Their reported profits, their whole financial picture would have looked much less rosy during that critical period.
Okay, so that's the first big accounting test. VIE consolidation. You mentioned another one.
Yes. The second key point is revenue collectability. Basically, JAP says you can only recognize revenue if you're reasonably certain you're actually going to collect the cash.
And GIC's argument.
They argue Weineng was pretty heavily leveraged, constantly needing to raise more money. So was collection really certain? GIC suggests maybe not, meaning NIO shouldn't have booked all that revenue up front anyway. Regardless of the structure, it should have been booked as cash came in over time.
Now, NIO's pushed back on this, haven't they?
They have. They've denied wrongdoing, stated they followed GAAP, pointed out their external auditors reviewed everything, and called earlier similar claims from a short seller meritless. Though it's worth noting the SEC did ask NIO some questions about its VIE treatment later on.
Right, but regardless of how the court rules, what's the bigger takeaway here for investors?
It's huge. When a major conservative player like GIC sues over something like accounting structure and disclosure, it really resets the risk calculation for all U.S.-listed Chinese companies. It puts everyone on notice.
We saw the market react before, didn't we, when that short seller report came out in 2022?
Absolutely. Grizzly Research raised similar points, and NIO's stock took an immediate hit. The market learned, or at least got a reminder, that complex structure risk can directly translate into valuation risk. People start asking harder questions.
So it boils down to, can you trust the numbers? Especially with these complex offshore setups, the skepticism level just goes up.
It really does. It's fundamentally about the price of credibility in the market.
And thinking ahead, if GIC wins this,
Yeah.
or even makes significant headway,
The ripple effect could be substantial. Auditors worldwide will likely face pressure to scrutinize related party deals and VIE structures much more intensely for all U.S.-listed Chinese firms. It could change how due diligence is done across the board.
before we wrap up, you've been watching China Biz Explained, where we bring clarity to China's global impact through independent analysis. Yes, the narration is AI, but the work behind it, the research and fact-checking, is entirely human. Accuracy isn't optional, it's our foundation. If you'd like to see more work like this, subscribe to support our channel. Thanks for being here. Until next time.